Seeds of Wisdom RV and Economics Updates Thursday afternoon the 9th of October 25. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Good afternoon. Dinar recaps. IMF chief declares, uncertainty is the new normal. In the face of persistent volatility, global resilience is being tested, and the era of stable certainty may be over. Headline warning. IMF Managing Director Kristalina Georgieva stated at the Milken Institute that uncertainty is the new normal, signaling elevated risks across global markets and economies. Despite ongoing challenges, she noted the global economy has held up better than feared, projecting approximately 3% growth in 2025. Georgieva warned that current market valuations resemble pre-dot-com bubble levels and cautioned that a sharp correction could expose deeper fragilities. Underlying risks highlighted, tariff tailwinds and policy spillovers. She warned that trade tensions, especially U.S. tariffs, are yet to fully unfold and could trigger inflation or financial stress. Gold demand as a signal. Soaring gold prices, already above $4,000 per oz, serve as an early warning of investors fleeing safer assets. Debt overload and tight policy windows. Public debt nearing critical thresholds in many nations means less room to maneuver when shocks hit. Vulnerability of emerging economies. Smaller states face amplified risk in such environments, as capital flight, FX volatility, and debt stress can cascade quickly. Connection to global financial restructuring. Normalization of volatility. The IMF's tone shift legitimizes the idea that structural instability is now baked in, not an aberration. Reserve and capital rethinking. In conditions of uncertainty, nations will prefer asset-backed, less dollar-centric instruments, i.e. gold, sovereign alternatives. Blocks and parallel systems gain appeal. Traditional centralized institutions may be bypassed more aggressively in favor of regional or sovereign networks. Stress test on financial dominance. If confidence in Western institutions falters, the legitimacy of alternative architectures strengthens. Georgieva's declaration is more than cautionary, it's a herald of a new era. As uncertainty becomes constant, actors, states, funds, and financial institutions must reposition toward resilience, autonomy, and strategic flexibility. The global economy is no longer about stability, it's about managing disruption. Bank of England warns of sharp market correction risks. As AI valuations soar and central bank credibility wobbles, the UK warns that markets may be on the brink of a storm. Core warning. The Bank of England, BO, cautions that a sharp correction could occur if sentiment sours toward AI valuations or the independence of the U.S. Federal Reserve. The BO's Financial Policy Committee underscored that U.S. equity valuations, especially in AI-focused stocks, mirror levels last seen during the dot-com bubble. The concentration risk is stark. 5 firms now account for approximately 30% of the S&P 500's value, intensifying vulnerability to shifts in AI optimism. Because UK and US bond yields are correlated, a weakening US bond market may increase UK borrowing costs. Contributing tensions. AI bubble risk. The overvaluation in tech, driven by AI hype, raises the possibility of abrupt reversal. Fed credibility under scrutiny. Any perceived politicization or interference in the U.S. central bank could shake confidence across global markets. Fragile macro linkages. High debt loads, inflationary pressures, and fragile corporate balance sheets increase systemic sensitivity. Spillover danger. A crash in U.S. markets reverberates globally. Emerging markets will feel amplified impact. Linked to global restructuring. Fragile central legitimacy. If central bank independence is questioned, the entire edifice of credibility beneath fiat systems weakens. AI as a systemic catalyst. Tech bubbles now threaten macro stability, meaning future financial systems must embed circuit breakers and structural dampeners. Acceleration of alternative rails. When faith in old systems is shaken, capital gravitates toward safe alternatives, gold, decentralized networks, regional systems. Recalibrated risk patterns. Volatility becomes a core dimension of finance strategy, not an anomaly to be avoided. Why this matters. Key takeaway. The BO's warning is a red flag. Markets resting on AI-driven narratives may lack real foundations. As risk mounts, institutions and nations must brace for rupture, not just correction. The era where momentum alone propels markets is ending. Structural resilience and alternative systems become the new edge. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: dinarrecaps.com